Hello everyone, and thank you for being here for this presentation. My name is Matkovskyy. I came from Rennes School of Business in France, and I would like to present you the results. Actually, it's not one paper. It's 5 papers, roughly speaking, 4 that are actually formalized, and the 5th one is actually in the process. So all they are under review. 1 is accepted, and the general topic is behavioral foundations of individual cryptocurrency adoption. So we have the Nordic countries and France, just to compare and see is any similarity between these 2 sets of countries. So it was supported by NASDAQ, the Nordic countries studies, and we got some money from the school to have the French data. So this work is with 2 of my colleagues, Ylva from King's College London and Akanksha from the same place as I am. So, why we study this? Well, to be honest, because of money. We got money from NASDAQ, and we agreed to study the Nordic countries. So that's the first motivation. Second motivation, it's very interesting in terms of retail trading, because retail volumes are increasing, and it's estimated roughly like 40% of daily crypto volume. Stock market retail is like 23%, or it was 23%. Fundamentals are quite opaque, so we do not, or we can speak that cryptos have some fundamentals, depending what is the definition for this. They have high volatility. So behavioral aspects can actually affect people quite easily. Without fundamentals, we have volatility, people don't have enough knowledge, we will show you. So people actually go for cryptos just because they want to do. And we found several gaps in the literature. So which questions we actually try to answer? So what drives individual crypto adoption in the broader sense? And in terms of factors, we looked at gender, at optimism, at knowledge, risk tolerance, trust, beliefs, ethics, and memory biases. This is what I plan to speak about, and if we have time, about happiness. We have some research saying happier people accept much more of risks, right? So why not to play with cryptos? It's amazing playground. It's risky, it's less regulated, and people know less than about other financial products. So we have 2 surveys, one in Denmark, Finland, and Sweden, 1,519 respondents in the final data set. The fieldwork was in 2022, so it was the crypto winter, so they were more pessimistic potential than in other periods of time. We have French survey in May 2023, so they were more optimistic. We did it with the help of the company, JWI, to have the reliable data. They charge us a lot. Please cut it from the video. So, and it's gender balance, broad coverage, but we still focus on youth because they adopt cryptos more than adults. Yeah.
Why do you mention the gender balance? Because we know the majority of the people who invest in crypto are men.
Yeah, but we want to have the representation of the.
But then the representation would be biased.
It's random sample. So in the final sample we had the more or less balance.
I've seen that paper from CFTC that they look at the people who invest on Bitcoin ETF. They are mainly
exactly.
Younger ages.
Yeah.
So if you have a balanced gender, balanced range of age, then you're not really capturing the ones who actually mainly go and invest massively.
Well, we capture through the weights in the survey.
Okay.
So we still have the probabilities of being in this survey. But yeah, you're right, it's young males everywhere. But we had to be representative, we couldn't focus only on youths. We had to survey the broader population. So overall, 11% is crypto ownership, men 18%, women 5.2%. And median wallets, men 1,000 roughly, and women 800 something. Oh, 320, sorry. So it's overall. So now let's take a look at the Nordic countries. So we look at the crypto adoption. So we had 9 different assets, and so pensions, real estate, savings, stocks, cryptos, antique and art, bonds, mutual funds, and ESG. So crypto is around 11%. So it's somewhere in the middle.
So you don't have it separately for crypto and NFTs, or you combine them by yourself? So this is the data that you are given.
Yeah.
Can you separate between crypto and NFTs?
No.
You cannot.
No. Here not. In other questions, yes. NFTs, Web3, stable coins, whatever they have. But here just we wanted to initially screen our substantials. So yeah, it's not far from real estate. Then we look at the purposes. So purpose to make money quickly, it's the main one, no surprise. So it means that people didn't lie. Again, we have totals and per country, but I give you just the general overview. To invest into financial assets is second best, so people want to use cryptos as the bridge to something less volatile. Then how they fund this? So we found that mainly people pay from normal monthly budget or from some savings. It's a good sign because, well, loans for cryptos, it can kill. So then we look at the past experience, gains or losses. And we have quite interesting that roughly 12% had gains, and we versus roughly 5% of losses in the past. We have per gender, per country. Males have higher gains, but have higher losses as well, because they trade more. So that's just the general picture. Then we ask some knowledge-related questions. So we just ask, what is crypto from this? And only 23%, the fourth is correct. So only 23% answered correctly to the objective knowledge question. Later we ask them, how do you think you are good in cryptos? And the number is very high. Actually, everyone is good. So we calculated overconfidence, so everyone is overconfident about his or her skills. 40% honestly said they don't know. All the rest they try to guess. So then we ask people who are, if they are interested or not in some different trends. So crypto, DeFi, NFTs, stablecoins, Web3. So here are the results. Not at all and not very interested. So it's inverse. So what we can see that typically half of the population is not interested at all. Of course, crypto dominates in terms of interest. Web3, stable coins, DeFi, they are out of radar mainly. So they don't like it. But at least 40% or something are into it. So then we asked, okay, do you want to hold cryptos in the future, or do you want to buy cryptos in the future for different periods of time, for next 6 months, next year? And so we have that roughly 30%, yes, we would like to have cryptos in the future. So it gives us some perception that, okay, we can estimate something They lied, they didn't lie, we don't know. So that's the setup. And finally, we have more questions. We had actually around 60 different questions. I just present some part of it. So we asked about risks. So what people think is bad about cryptos? What can potentially prevent them from investing into this? So we asked, I consider cryptocurrency to be a risk. Cryptocurrency are unregulated. Cryptocurrency exchanges are vulnerable to cyber attack. Legal status is always uncertain, and the price of cryptocurrency is highly volatile. So what we see, that the first quintile is the highest for cryptocurrency to be a risk question. So people acknowledge, okay, it's risky, but nevertheless they try to figure out their way out with some gains. So yeah, people see cryptocurrency from different angles. As risky, as not regulated, as highly volatile. So we applied different methodologies. I just put to make a link with science. Because, well, we had different dependent variables. We had different set of independent variables and covariates. And we had different amount of responses for different questions. So we had some noise. People were guessing. People were not sure what they answer. So we wanted to take into account all these uncertainties. We started with standard probability models, so ordered regression, elastic net to penalize, propensity score, latent class models to sort out the risk, the noise, e-values to see how omitted variables could affect. Forest, mediation, moderation analysis. So, results. First, we started with gender. It's interesting. Gender is all around us. In finance, we have gender inequality. In life, we will have gender inequality. But at the same time, it is kind of declared that fintech can be a solution to this gender gap. So this inclusivity can be addressed by fintech. So the teaser is no, it doesn't work. So we have some previous research, and what we have, that gender remains very, very powerful predictor for crypto participation. We checked participation today and participation in the future. So for both cases, gender gap is just tremendous. So cultural norm stories do not explain these gender gaps, because we actually have the Nordic countries, and the gender gap is not as high there as in other countries. So, but still, in terms of cryptos, it exists there. Knowledge, risk tolerance, optimism, and regulatory clarity are malleable. So gap is elastic to information framing. So it can be reduced if crypto is framed as the opportunity. We ask people, do you see cryptos as the opportunity or not? So if they see, they invest more. Regulation and legal status also affects. The higher clarity, higher adoption, and the gap is shrunk. So economic optimism, we had question, I see prices increasing, decreasing for different categories of products, from groceries to petrol. So we calculated the economic optimism index. So yeah, 33% of this gap can be affected by this economic perspectives. And interestingly, that also affects, but mainly female investors. So that's about gap. Then we look at trust. So the logic was simple. Cryptos, less regulated, more anonymous. Potentially, if we have a lot of trust, we have less adoption, right? That was the first idea that we had. In finance, it's opposite. Higher trust, higher adoption. We have some key references for this idea. So what we received? We received the trust in strangers in financial. So we had several questions. I trust strangers in financial matters, I trust stranger in general matters. So general matters doesn't matter for cryptos, in financial matters it does matter. So if I trust strangers, I will adopt cryptos more willingly. And it opens up the possibility for fintech. Interestingly, that still confidence in governments lowers adoption. Higher confidence in governments, lower adoption. So it was surprising, personally. And all the investors have stronger trust effect. So yeah, then we look at knowledge. And what we find that knowledge rises risk tolerance for everyone, especially for women. So the better knowledge they have, the higher adoption for women relatively to men. And education, of course. Education drives all this inclusion. So higher education, higher adoption until PhD. So PhD doesn't like. That's.
Spend more money on alcohol there.
Sorry.
You have to spend more money on alcohol.
Exactly, yeah, and I don't have time. Again, so then we started looking at the philosophical probably question and some ethical. So respondents answered that yes, cryptos not always is ethical in their adoption and usage. So we had questions like cryptocurrency are ethical, and they agreed or disagreed from 1 to 10 on the Likert scale. And what we found, so those who agreed that cryptocurrency is not ethical, but had losses in the past, they're more willing to hold cryptos in the future. It's like, okay, I know it's shady, but whatever, I have losses, I will play. And then we did similar for cryptocurrencies are compatible with sustainable development. We have all these publications, news that it's not. Again, if I know that it's not in line with sustainable development, but I have losses, I don't care about this. I'll be playing.
There is a paper by Paul Montas in JVF that they show when people get scammed, they start behaving gambling, like to cover the money that they are scammed in the crypto environment. So the explanation for this fund.
Exactly.
If you want to, I don't know if you have linked or cite that paper, you can link it.
I guess we had the Montas there. It's accepted, so we cannot change it. But they try to play against the house to offset the losses.
Yeah, exactly.
That's it. But the interesting story is that whatever ethical aspects are, money runs the show, as always. So positive beliefs in terms of cryptos as ethical, sustainability, whatever, increase intentions. Knowledge moderate beliefs, so the greater knowledge people have, the stronger relationship between beliefs and adoption. Past experience shapes future intentions, and financial motives dominate ethics. And the crypto sustainability beliefs do not deter holding. That's what we have. Then we went further, and we tried to look at memory. We didn't have this question in the Nordic context, but we had it in the French context. So, what is the logic? It's not, it doesn't have fundamentals. It's volatile. People see events. People think that they know everything about cryptos. People try to remember something, and based on our memories, we plan our future. We form our expectations. We have some literature saying that heuristics and recollecting past events influence decision. We have that people use memory recollection to form expectations, to reconstruct events. So in finance, it's been started studying. But we didn't find anything about memory in cryptos. And it's fascinating because, again, it's highly volatile. We started looking at different types of memories. It's another science. And we try to understand how misremembering something can affect my expectations for future prices. So that was the logic. So we use Talving's theory. He suggested that we have episodic and semantic memory. Episodic memory, it's recollection of specific events or specific prices, and semantic memory is broader, it's just understanding of something. So we had 850 investors, mean age 43, 52% of women, randomized, attention check, prices. So we asked the respondents, what was the price of Bitcoin, Ethereum, and Solana 1 year ago? And then we took these prices from Yahoo Finance and average across the month, so they didn't go too high and too low. So we calculated row error, recall minus real price. We calculated absolute error, so just to know the magnitude, not the direction only, but also the magnitude, and we calculated relative error, error divided by the real price of April. So, so we averaged 12-month outlook for petrol, groceries, utility prices to have the expectations. So what we have? We have huge errors. So mean Bitcoin error for males is minus 30. It's not huge, but for females is 161,000. So median Bitcoin error is also high. Here we have the distributions of male versus females. So what we have? That male typically undershoots when they guess, and female overshoots their guess of cryptos. And similar is for Solana and Ethereum. For Solana is completely disaster because no one knows the price actually, they just guessed. For Ethereum it was better, but I present only Bitcoin because they are more familiar with this crypto. So then, let's look closer at this problem. Possibly if you own cryptos, you remember better, right? It's true. So if you are a crypto owner, your errors are lower. Okay, makes sense. Then gains, losses. So we have no answer, we have one is gained, two previous experience was about losses, and third is prefer not to say. So what we have? Losses are typically associated with high memory errors. They just don't remember. And then, possibly if you trade more frequently, you remember better. No. So the higher frequency of trading, so we have several times per day, once per day, several times per week, once per week, several times per month, once per month, several times per year, and once per year it's 8, but there's no observation there. So we have the highest errors for the several times per day. They just don't remember the price that was last year. They completely lost. And then, about strategy. So long-term versus short-term. Obviously, for the long-term strategy, lower errors. And then we look at semantic memory. It's about knowledge. And so we compose it of several parts for objective and subjective knowledge. Objective, it's the test, the quiz. So we see males, females, roughly 10% for men under 25 years, they answered correctly. For females, it's triple. Then we asked about their familiarity. Are you familiar with cryptos or not? And we had 35 different cryptos. So that's semantic knowledge. Here we have some breakthrough about females, males, Bitcoin, Ethereum only, both coins different. But the takeaway is they are not familiar. They don't know in the vast majority. So about crypto expectations, I expect crypto prices go up, go down. We have decrease, stay the same. We have quite high increase, and of course majority answer don't know. So this is how they expect. And here we have the analysis of the crypto expectations per gender, per male, per age, sorry. So we have mainly people are positive about cryptos. So what we have then? Perfect. So episodic recall is highly error prone. So women, as I said, overshoot, men undershoot past prices. Errors dampen bullish crypto expectations. The higher memory errors are lower expectations. So crypto knowledge, like semantic memory, understanding, also offset these memory errors. Knowledge boosts confidence, so and moderate misrecalling undermines it. And higher inflation expectations nudge crypto optimism. So people see cryptos as inflationary hedge. So that's the main results. If time permits, I have about happiness, but we can either speak about happiness or possibly have questions.
What was the one sentence result of happiness? Confirm the idea that happy people are more.
No, it's not so easy. No. So we have happiness and how people position themselves against others. So I want to have what others have, like house, travels, clothes, whatever. So it was many different things. And here the main takeaway. So pension, positive association with happiness, real estate positive, savings mixed association, stock shares positive, crypto assets. So we have not significant and mixed results. Potentially, the sample of the crypto owners is not as high as for other assets for France. So
This is in the Nordic country or?
it's only France. Only France. So happiness and memory is only France.
Have you read in the literature, or maybe you have broader knowledge, about populations in less developed countries than the ones that you studied and how they'll respond to some of these questions? No?
No. Well, there is the theory says that happier people are more prone to take higher risks. So that was the starting point. So France is the middle. So they are not very.
No, I'm trying to bring you back to the trust issue. So my hypothesis would be that in a less developed country, they would say, we don't trust the regular banking system, we're going to go DeFi, we want to have more transparency to crypto, and that will skew their responses almost on all of your questions, I'm guessing, in drastic ways. Have people studied anything?
Yeah, people studied, and we have other paper on trust globally in the world. Yes, so we have positive association between trust and crypto adoption.
Okay.
For all the countries.
So they believe that crypto is more transparent, crypto is...
Yeah, somehow like this. But yeah, higher trust, higher adoption. So this shady business is not the one that defines crypto adoption. Yeah. Other questions? Comments?
Very informative. Thank you.
Thank you so much. Thank you.